Today, we see stocks making new all-time highs. But however, look at how the SPY closes. We have quite the wick on top of this candle. And Intel with a massive gap up today. All this is taking place the day before triple witching. Now, when we come over and look at how the indices fared across the board today, the Dow was up 124 points. NASDAQ was up 209 points. S&P 500 up 31 points, with the Russell 2000 being up 5.96. Now, when we look at advancing issues versus declining, it was overwhelmingly in the bulls' favor, with 71% of issues advancing on the day. Then when we come over and look at the sectors across the board, technology by far outpacing everything else. Consumer defensives and consumer cyclicals were the laggards out there. Now, if we come over and we look at the Qs real quick, we can see the Qs also have a wick on top of the candle, but also a wick on the bottom. And today we're able to produce another large gap. So if you guys have been tracking, waiting for this Fibonacci retracement level, we have to go ahead and grab the Fibonacci tool and go ahead and move it up as a market went ahead and made a new all-time high today. However, is there problems brewing? Because look at this article right here, Subprime Crisis 2.0, red flags fly as alleged fraud triggers billion-dollar auto lender bankruptcy. You can scroll right down right here and look at this chart. Yikes! A race all the way down to zero. How fast will it get there? Well, today we woke up, Intel stock is soaring. Here's why NVIDIA is investing $5 billion in the chip maker. Now, if we go over and we look real quick, we looked at a chart of Intel. Intel, massive gap on the way up, but notice we were not able to close anywhere in the upper portion of that candle. Then we come over and take a look at NVIDIA today. NVIDIA was strong, was up 3.49%. However, when we zoom this out a bit, we can make the case that if NVIDIA cannot make it above the swing high over here, we could have a case where we're starting to put in lower highs in the market. However, I do want to caution you guys, the MACD indicator is right down by the zero line and could be getting ready to rip on the way back up. This morning, we did get a little bit more good news out there where initial jobless claims tumble back into their 4-year range. When we look at this graph right here, you can see it right here in green. Coming on the way back down, we had 231 new filings out here. Now, we look at the economic calendar. We also had the Philly Fed come out today, which came in at 23.2, which was also a much better reading. Now, we look at the news for tomorrow. Guess what? No major economic news. However, we do have triple witching, which we got to be mindful of for tomorrow. Now, we come over and look at the dollar index real quick. Dollar index today, a nice bullish candle, up 0.37. Then we come over and look at the precious metal gold. Gold today was down 39 points, but when we look at the candle, we have a smaller range body and we have a wick on the top, wick on the bottom, a little bit larger wick on the bottom, but just by a small margin. Also, look at the MACD indicator. It looks like it's about to cross to the downside. Now, what we do want to do is we want to go ahead and grab our Fibonacci retracement, measure from swing low right up here to the swing high. Notice where the 50% level is, comes right within that zone. Now, that zone, looking at the breakout point right over in here and breaking out of this range, where when the market breaks out, quite often, we're going to come back and retest those levels. Now, jumping back over and taking a look at the SPY real quick. SPY today, we talked about the wick on the top and the bottom. MACD indicator, it does have a bullish cross, but still look, the peak of the MACD indicator is nowhere to the extent that we saw when the market was rallying over here. I still think at some point we're going to come down towards some of these high volume nodes. It's just a matter of time. Now, we want to go ahead and grab our Fibonacci retracement and just measure this last leg that we've had on the move up. The 38% retracement and 50% retracement would be enough to come down and start auctioning back into the minus development area over here. However, we all know stocks only go up, right? Let me know in the comment section down below. Do you think we're getting close to a high in the stock market? Come over, look at the 4-hour chart. MACD indicator is starting to look a little bit weak. We saw the rounded effect yesterday. We kissed and we came back up. Notice as the market made a new all-time high. Did the MACD indicator make a new all-time high? The simple answer is no, we did not make a new high. And now we have this large gaping gap right below us from today. On the 30-minute chart, you can see that rip up right at the open. MACD indicator on the 30-minute chart also starting to cross to the downside. And when you zoom this out, notice the peak in the MACD indicator. It's nowhere near the higher peaks that we saw over here, which is also a warning sign that we could see more selling pressure in the very near future. I want to remind you guys right now, Take Profit Traders having a 40% sale off all their evaluation accounts, 0 activation fee. Use code epitome at checkout. Now, we come over and look at the futures markets real quick. We start off looking at the weekly volume profiles. along with the 4-hour candles. Now, right now, we're just barely above the developing value area high, but if we start cracking down below that level, I want to pay attention to the developing point of control and that high volume node that we have on the composite profile, somewhere right over here about 66, 69. Keep in mind, we talked about this in Sunday's video, and we've been talking about it on the live streams, where last week we were able to close above value area high at 66.05. Now, normally, whenever we close outside of value, within the next 1 to 2 sessions, we come back and visit that level. Well, a session, since we're dealing with a weekly volume profile, represents 1 week in time. Well, so far this week, we have not made it down there. So is it going to be next week before the market makes it back down towards that level, or is triple witching about to sink stocks? Now, when we come over and start looking at the 30-minute volume profile real quick, notice today we were unable to take out the P point, and we were unable to take out the point of control at 66.61. We can break below value low tomorrow tonight, 66.90.75. Watch for this wick right here to come back and get tested, 66.69.5. Then the point of control. Then we'll see if we can come down towards these candle bodies at 66.45.75. Now, I want to caution you guys, with triple witching, a lot of times the market's going to sit there and go back and forth. You get a quick rip up in the morning and then consolidation. And then in the afternoon, we'll get a quick move as well. And then a lot of just back and forth as positions are being offset. Now, we come over and look at the NASDAQ futures. Again, we talked about that wick on the top, wick on the bottom. MACD indicator is crossed to the upside. The peaks still not near the other peaks that we saw previously. At some point, we will get a retracement down to a 30% retracement and probably even the 50% level, which now correlates with that high volume node somewhere about 580.12. Now, on the 4-hour chart, you can see last candle, a little bit of a down candle out here. We have that large gaping gap left behind from today. Now, notice the MACD indicator did push to a new high. So as the NASDAQ made new all-time high, the MACD indicator did push above the peak that we saw over here. That is different than what we just talked about with the S&P 500. Now, when we start looking at the 30-minute chart, we can see that large gaping gap. Now, I'm going to treat this as a P as in Paul shaped profile. Even though you can't see the profile sticking out where the gap is, I'm still going to treat it as such. So tomorrow, if we're trading below value or low, I want to look down here towards gap support at about 593.01 for a potential target. Below that, I want to look all the way down here for the gap to be filled at 589.97. Now, keep in mind, we have no major economic news on deck for tomorrow, but we do have a lot of options positions that are going to be repositioning tomorrow as the futures contracts expire, stock options expire, and index options also expire tomorrow. Now, as we come over and look at the 4-hour chart real quick, notice we talked about this on the live stream. We had a prior all-time high. Well, today we wicked down towards it. And then as we ran up, well, on the live stream, I got myself in a bit of a pickle and I just kept fighting the market. If you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. Now, notice right now, we are currently above the developing value area high. If we can get back below that price point, I do want to turn my attention to 24,543.25. At some point, we will get a pullback, even though some of you guys think the market only goes up and is never, ever, ever going to go down. Now, we come over and look at the 30-minute chart. This is something we talked about on the live stream as well. Notice where the P point is down here. Did we test it? Absolutely not. And this is something I have not seen in quite some time. I can't even remember through my back testing if I've actually seen this actually take place. But if you notice, the last time we hit the P point was right here on September 11th. Now, the P point, which is right here where it says PP, has a 68 to 70% chance of being tested at least once per day. On the 11th was the last day we hit it. We come over and look at the 12th. We barely missed hitting it by a tick or two. So that's day number 1. Day number 2, we barely missed hitting it. Look right here. The low was 317.75 and the P point was 316.33. So that's day number 2 where we missed testing out that level. Then we get day number 3 right here where we did not test it. Then we had yesterday where we barely missed hitting that P point. And now today is going to be day number 5 where we did not hit the P point. Now, this is just a standard floor trader pivot. If you want to know where the new pivot is going to be, wait until the market closes. And all we have to do is take the low price plus the high price plus the closing price and divide it by 3. Then you can draw a horizontal line right across your screen. Now, we still got about 40 minutes before the market's closed, so I'm not going to go ahead and map that out for us. Now, tonight and tomorrow, if we are trading below value or low, I do want to look for the market to come down and potentially test out 24,410. Also on the weekly profile, other than this level, keep in mind, last week we closed well above value area high at 24,182. And the rule behind that was just like the S&P. whenever we close outside of value, we expect the next 1 to 2 weeks we come back and visit it. But I do want to warn you guys, if we do not come back and revisit that level by next week, watch out. It's probably going to be several weeks before we come back and visit that level, which means new all-time highs in the stock market. Now, if you guys trade with prop firms and you want to learn how to copy trade on TradingView, then you want to make sure to check out this next video right here.